be greedy when others are fearful, and fearful when others are greedy.
100%.
Even though sentiment is down and pessimism is up, I think there's going to be choppy waters regardless. But if you're looking for properties, go out there and hunt. So today's podcast is our monthly roundup. We're going to dig into the trends, some deals, and some news articles from November, and also talk about what we're seeing in December and maybe a little bit of 2026 as well. But my name is Chris Lopez. I'm the host of the Denver Real Estate Investing Podcast, and I've got my crew here to give us updates. So for this month, Jeff White is out. But luckily, Jenny Bayless from the Springs is back. Welcome back, Jenny. It's been a minute.
Thanks, Chris. Good to see you guys.
Yeah, likewise. And of course, we got Brandon with Key Renter and Troy with Nova Home Loans. Good morning, guys.
Morning.
All right. Well, we all want to jump into trends and start talking details. Jenny, since you've been absent for a bit, what is going on down south in Colorado Springs?
Yeah, so I would say the thing that jumps out the most at me is that new listings are down almost 36% month over month. So from October to November, new listings dropped down from about close to 1,400 to about 900, which is a pretty steep jump for month over month, in my opinion. But if you compare that to November of last year, it's only down about 1%. So I don't know if that's seasonality, or kind of what is leading to that. But I'm sure everyone has probably heard a lot of the news stories that people are kind of just pulling their listings right now and just waiting out and seeing what happens with the housing market. On a national level, I've been hearing that. So I would assume that is just kind of making its way locally. And then in terms of sales prices, median sales price actually went up close to 4% month over month. So it's resting at about 492 almost, rounding up for median sales price. So I thought that was interesting that it's really, really holding steady. In fact, it's even up year over year from 485. And then in terms of total active inventory, it's down about 10% month over month. But it's up 15% year over year. So yeah, I think, I'm sure kind of what everyone's been seeing nationally is just trickling down to Colorado Springs locally, those trends, and people are just kind of wait and see to see what happens. And I think people are still holding out for those prices that they want. And if they don't get it, then they are just going to wait. No forced sales situations, or, at least a low amount of those happening.
So one thing that jumped out to me looking at the Springs data is the condo and townhome section. I think you were given the data for single family and patio homes. Mm-hmm. And we got condos and townhomes. So you got both of those combined in here. Average sales price is up 4.5% month over month and up 10% year over year. That stood out to me as not what I was expecting. And maybe it's just some townhomes a lot higher than condos. Do you have any insight? Because that was surprising to me.
I mean, the only thing that jumps out to me in terms of that is that the population size of that data is so small. Like we're talking about 100. So it's more easily skewed as opposed to single family homes, which is over 10 times, what we're talking about in some cases. So I don't know, just kind of the statistical piece of that would make me assume that just the population size is so tiny. I'm not really sure, if you can really figure out a trend from that. So I don't have a good guess as to why that would be, but, I guess if I had to just pull something out of my hat, I would assume it's the affordability piece of it, in that condos and townhomes are, lower price than single family homes, and people that really, really want to buy, maybe they're just purchasing what they can afford, would be my assumption.
Okay. That's a really good point about sample size. So, and yeah, it may just be I did not look at the sample size on there. You're right. And we're talking about 100 and change type properties on there. So it is a very small sample size. But are you getting you're an investor, an agent down there. Is the vibe or the feel that condos are hot, or is it still like kind of we've been seeing last year or two where they're just not a lot of interest.
Not in my sphere. I don't think they're too hot. Some of the townhomes that are newer, I would say, are still standing on their own, but just the ones that are getting beat up with HOA fees, I feel like that kind of turns a lot of people off.
Yeah, and I noticed months supply on those were at 6.4, which the old thing was like 3 to 6 months is a neutral market, right? And we're fully into a buyer's market over 6 months. So that doesn't tell the story that it's a hot market, right? But it is that weird thing we're experiencing. Prices are somehow up or staying flat despite the fact transaction volume's so low and inventory is sitting. But.
Great. Well, let's switch over to Denver. All right, so I got the DMAR snapshot up here for November data and a year-over-year data as well. So the thing I wanted to look at was our new listings as well, since you mentioned you had that sharp drop-off, Jenny. Here I think you were in the 30s. We were at about a 41% month-over-month decline in new listings. So I think that's very on par with what you're seeing down Colorado Springs. Because that was new listings was the stat you pulled for that, right?
Yep.
Yeah. Okay. So yeah, new listings are down, quite a bit month over month. And then year over year, it's down about 5%. Now that's new listings. We look at active listings. Active listings are down month over month, about 15%. But they're still up about 13% year over year. Now, looking at the seasonal history of Denver, we typically see a decline in both new listings and active listings going from October to November. So no big surprise there. But we are still seeing inventory build. And I wanted to jump down to this chart here where it's showing active inventory in the green line. And so you can see here, for people who aren't watching this, right, this is going back from January 2008. And so back then we were at, 25,000 plus homes, which is extremely, extremely high. I think our average is around 13 or 14 or 15,000 for a balanced market. And then we're sitting over about 10,000. And you can see here, ever since, rates started to go up, we can see the inventory has just been climbing pretty much every single year. Now we're still seeing the seasonal trends where, hey, in Q4, inventory is definitely coming down a lot, but overall inventory is still building. So Troy, you're a lender. I'm sure you took econ at some point in college, right? Supply and demand, right? What happens when we have growing supply to prices?
Well, you'd think you'd see the prices be coming down on that. But the numbers aren't completely reflecting that, are they?
Yeah, what's interesting here again is we're going to the detached and detached, the single family homes on here, and I'm going to separate out that to the attached, since we've been seeing that go in different directions. Average up about 2%, and I think Brandon, you were commenting before we hit on the podcast that you were surprised that we were at the average of $800,000 a price per unit, huh?
Yeah, that's just crazy. That and when we looked at the PPAR stuff, the median and average prices were fairly close together. But yeah, to see, especially on detached, much higher average than median. So I'm guessing you're getting some really big, like high dollar homes driving that up.
Yeah, pulling that median.
And that's what I've been thinking. There, once you get into $1 million and probably more like $1.5 million, $2 million above, it's a totally different market, right?
Yeah.
Those buyers don't have the same finance considerations that someone buying a $750,000 townhome or house does.
Yeah.
So I think I think we're seeing some, there's different things when you go into different parts of the market. But looking at condos on here again, what we typically see, a little bit different from Colorado Springs. So this is attached. So condos and townhomes. We are down on average about 5% year over year, and then about negative 7% median year over year, with month over month being negative as well. So no surprise there. I'd still have to see at some point data between townhomes and condos separating. So I think townhomes probably aren't doing quite as bad. I think condos are probably doing worse.
Yep, I would agree. Yeah, for sure.
But speaking of condos, Troy,
someone Closed a condo.
Closed a condo, I heard.
Yeah, we had a condo closing, although it was a second home in a nice resort up in Steamboat Springs.
Yeah, so this whole time last month, I got a condo under contract with a client. We're going to close. I'm just assuming it's someone buying a $300,000 condo in Denver. Hey, we closed all this place in Steamboat Springs.
It was a $720,000 condo that was like less than 1,200 square feet.
Oh, wow.
Right
on the mountain or something?
HOA. I can't remember off the top of my head, but it was north of $600-700 a month HOA. So
it's actually not too bad for a resort town.
It's a resort. So
is it right on the ski resort or something?
Yeah, it's
real
like
close?
has all those amenities that you want for a nice second home, steamboat, ski condo. So Good news for us though is that it was a limited review of the condo. So what that means for us in the lending world is that we don't have to check all the boxes for eligibility. Because I think if you did a full review of it, it would not be a warrantable condo.
Is that because the buyer put down 25% greater?
Yeah.
Okay.
Yeah, he put $200K down, financed about $520 on a $720 purchase. So with that down, and then good credentials for the borrower, so it has to pull through the system in such a way to where you score a limited review. So Fannie Mae and Freddie Mac, when you run it through their computer, they will tell you, hey, we want a full review on this, or we'll let you get away with a limited review. So got a limited review and got a condo, Chris.
All right.
That's great.
Not the normal condo around the metro area that we'd like to see, but nevertheless, we've been.
It can happen.
Condos, it can happen.
So that'll probably be one condo you finance this year, right?
Yeah.
I mean, that kind of just shows the overall market trends, right? Of everything, right? Hey, there's.
Yeah.
I mean, we're not really doing any condo transactions, or I mean, I think zero. I'd want to say.
Yeah, not for any of our house hacker clients.
Yeah, and now you work with us, a bunch of other clients and other real estate brokers, and you've done one.
Yeah.
Which I think just kind of goes to show where the condo market is at. As a side note, I think it was like a week or two ago before recording this, I did a podcast with Amy Nakos, who's a broker investor in Summit County, and we did a deep dive into mostly Summit County trends.
Yeah, that's
very similar to what we're seeing here in Denver. Right, nothing's trading, things are dropping, and she's like, what she's seeing is hey, there's the people out there, they're buying their fourth or fifth home. That market is still very alive up there. But she goes, friend, that's usually not the market we're playing in. And she goes, for the sub $1 million stuff, it's just a great stall. And I think she'd mentioned kind of like one transaction she'd done recently for a condo pretty close to, I think, Keystone or Breck. But they took about a 20% haircut. The seller just wanted to get out of it.
Yeah.
And so kind of same thing where, about a 20% discount.
You'd think in the non-owner occ stuff up there, you'd have a little more of like, I just want to be done with it. It's not as driven on like, well, if I sell this, I got to move my family and pay a higher rate or whatever. But yeah, apparently you get that price lock even in that market.
Yeah, and I think a lot of people bought homes up there. They're just not like they're not financially pinched, right? So
sure.
we'll just sit there, we'll use it, we'll
wait it out.
Yeah,
that makes sense.
I mean that's my assumption. I am not at that point in my career yet where I can buy the second or third or fourth home yet. I'm a big fan of Airbnb instead of buying a vacation home, but maybe that changes as you get a few more commas than net worth.
Yes.
Yeah.
All right. So some other stats on here. I mean, everything's kind of like what we expect. We're seeing days on market increase. We're seeing inventory increase, and we're seeing very modest price increases. Now, I want to do just a very small kind of prediction for 2026. Hey, we're going to be recording this a year from now in November, December. Jenny, overall, do you think like detached prices in Colorado Springs will be higher, the same, or lower?
I'm going to say the same.
The same?
Mm-hmm.
For up here in Denver area, Brandon, higher, same, or lower? Single family detached?
I don't see any market forces changing significantly, so I think it's going to be pretty flat.
Flat? Troy?
I think the attached stuff, especially the condos, are going to be still slightly lower.
Well, the attached. I'm talking about detached. I don't think
detached, I think, will be flat to fractionally improved.
Okay.
Yeah.
I think they'll be
very modest.
I think it'll be slightly negative to flat.
Okay.
Before even taking inflation account.
Yeah.
I mean, at some point with all these, rates aren't going to change that much, I don't think. Inventory keeps building. I don't know.
Yeah. I'd like to still be optimistic, though. If Jeff was here, he'd say up.
Double digits up.
Yeah.
I've had, I noticed on that graph we looked at, the transaction volume is just, incredibly steady the last 3 years. Like it's that seasonal bump, but really like when we had those years of seeing like, months of over 7,000, maybe we only did that for 1 month or something, but you were getting a lot of months in the 5,000 to 7,000 transactions.
Yeah.
And now we've had like 3 full years of 2,000 to 4,000, or in those peak months, it'll be between 4,000 and 5,000. I've had a couple calls from realtors recently that are like, I'm kind of considering getting into property management. Could I pick your brain a little bit, or that kind of thing? So yeah, I think realtors who thought this was a little blip and they could wait it out,
Transaction volume is down, I need cash,
are feeling it like maybe this isn't going to turn around and I got to rethink the career.
My curiosity goes to, what did you tell him?
I said, I'll talk to you. I'm not going to paint a rosy picture and encourage you to get into it, but
Okay.
But I think it's a really good point here, because we're definitely below, I'll say the average from like 2012 as the market started kind of, heating up back then, to about around the same number, like transaction volume in like 2008, 2009, 2010 time frame. You probably can't see this on the screen here, but I kind of put together very like a horizontal line on there to help show it. But yeah, we're below where we were in the teens, and kind of around where we were in the during the great financial crisis.
Mm-hmm.
And the other thing that stuck out to me on this chart, to move on to the news articles, this new listings one. Active inventory in the month here. So I like this. It shows a good representation. So this green line is all residential. The purple line is detached, and the blue line is attached. So you can see, all kind of follows similar seasonal trends, but it is very, very clear that we have the same seasonality, just I'd say a little more pronounced, and inventory is building up here overall.
Mm-hmm.
All right, let's move on to some headlines and news. Now, Brandon, you submitted a few articles, and there was one here from Westward titled "Frustrated Denver Home Sellers Are Pulling Their Houses Off the Market."
Yeah.
No surprise.
Right.
What's the punchline of this?
We've all been living in this. I think the biggest thing that I took away from this was just that Denver was the second highest in the country on D-list. So for every 100 listings, we had 39 pulling those listings off in October, I believe it was. So the only market that was worse than that or had more was Miami at 45. So yeah, I think it's a data point that tells the same story we've been saying, but you get a lot of people, just wanting to sell their home, but not bad enough to lower it and find that equilibrium in the market. It's a lot of people just putting it out there and unwilling to swallow what it would really take to get it sold. And so you just have a lot of these, they come on, they fall off, and they never get sold.
Yeah, I mean, to me, this kind of goes again. I think in the case of flat prices, maybe negative, year-over-year appreciation. Like, I mean, Denver's always, from different headlines, we're often like a top 5, kind of like worst nation supply, delistings, apartment supply. I feel like a lot of times Denver's like a top 5 and kind of like the not so good off type numbers.
I know, yeah. And I feel like in some of the down markets in the past, that wasn't the case. Like, there was much worse markets out there that were hit, and we had like a really,
like, what time frame are you talking about? Like fairly recent or more like historic?
Yeah, I would say somewhat historic. Like, I just think we didn't see even in the 2009-10, we had a lot of foreclosures, but like compared to Phoenix or Las Vegas, or I don't know, there were just a number of markets where it was worse. A lot of Florida was worse in that time. So I don't remember seeing Denver in the top lists on those kind of things. So yeah, it's just interesting to see how there were times we've been on lists of the hottest markets and the most appreciation, and
agree with that.
To see the full circle. Yeah. And I think there was always this argument too of like, we're so well diversified across multiple industries, and we should be, everybody wants to live here, and there's all these like fundamentals, but it's interesting to just see that we're really feeling it, and we did really overbuild based on the current demand.
Well, part of it, kind of going back, we're looking at the supply, and we're saying, hey, the closed transactions are kind of similar to what 2008, 2009, 2010 time frame. I mean, how much bigger is our population since then? I mean, we're talking 15 plus years now, right? Like
30, 40, 50%. I don't know.
Yeah, I don't know off the top of my notes. I know it's bigger, right? I know it's significantly bigger, right? Denver and Colorado run through a big growth phase. Since then, now we're starting to see some like negative migration in Denver proper. But it's like, hey, we have a lot more people here. And about the same transactions we're doing, we had a lot less people here, which I always find that interesting.
So on a per capita transaction, it's definitely down.
Yeah.
Yeah.
All right, Brandon, here's the second article you shared from Zillow. Home value decline spread, but losses since last sale are rare.
Yeah, so this is just interesting. It looked at year over year. We're seeing the big stat that stood out to me is 91% of homes in the metro area are lower in value according to the Zestimate, which I know we all kind of might hate that or whatever, but overall I think they get the trends right? Yeah. On an individual property, sure, it can be off. They don't know everything, but 91% are lower than they were a year ago. But what I thought was interesting is that doesn't show up in our data. We're seeing sales prices actually up 1% or something like that, didn't we? Is that right on the Denver trends that average price was up from a year ago?
Yeah, we were up about 2%.
Yeah, so average is up 2%, even though 91% of homes in the metro area are showing a loss in value. So it's just kind of an interesting, again, maybe driven a little bit on some of that high value homes transacting that push averages up, but
it's also just a reality, right? We real estate, and we operate in a very illiquid market, right? You don't realize it, your loss or your profit, till you sell the property. I think that's a big part of it too, right? We're such an illiquid market, right? It's hey, some people are selling, most aren't, which is they don't need to be, but I think a lot of it has to do as well with that fact.
Yeah.
All right, so Jenny, you sent over a very detailed slide deck from the City of Colorado Springs and El Paso County titled Regional Housing Needs Assessment, December 8th, 2025. I scanned this, and this is packed full of data.
Yeah.
What jumped out to you in here?
So I found this to be a very interesting presentation. I'm also interested in the fact that the city is the one that actually is presenting this information coming from the city. So I think they're realizing that, hey, there is an issue. As a city, we need to address it. Now, what comes of that, I don't know. I'll be curious to see that. But basically, they had a couple of points that I found most interesting. The first one being that they've highlighted the fact that they say no market segment is adequately served. So that's super interesting to me, that there is not one particular segment of the housing market that is adequately served, whether that be income level, whether that be renting versus buying. Everyone's kind of in a weird situation right now. And they said that the sectors of the market that are having the most problems with securing housing are low-income residents, people exiting homelessness, singles, seniors, and active duty military. They don't really go in on this presentation specifically as to why, but I think it's pretty self-explanatory that I would think those would be the most vulnerable populations for being able to secure housing. It makes sense to me.
Affordability.
Exactly. Yep. And it says the findings estimate that there's a county-wide shortfall of 27,000 units as of 2023 and a projected need of 60,000 units in total by 2035. And I believe that this is in reference to, I know, a couple years ago, it was a big news article that predicted Colorado Springs having a larger population than Denver in a couple of decades. Do you guys remember that article coming out?
I remember that.
Yeah. So I don't know. I mean, we talked about it back then, but it just in the sense as okay, well, we have a larger footprint, so maybe that's driving it. I don't know if that's going to happen. My personal opinion, I don't know if that's going to happen, but I think that's what they're basing it off of. But I just found that really interesting that they said currently we're short 27,000 units, which is mind-boggling to me because if you drive downtown Colorado Springs, there's all these new high-rise apartments that we talked about a couple months ago that are sitting vacant. I believe it's because there's that discrepancy between what those apartments are charging and what people can afford. So there's that mismatch. I don't know the details of that, but I just thought that was interesting. And they said that some of the obstacles mentioned, including securing funding mechanisms, higher costs of building supplies, labor availability, public sentiment, and then NIMBYism. So I thought that was really interesting as well, just in the sense that if you're saying we need to actually build more housing, you cannot build more housing at a price point or at a cost point that would allow you to then rent it at an affordable rate. So there's just that huge discrepancy between everyone. And then they said that El Paso County's population was 752,892, which is up almost 400,000 from 1990. So
Wow.
that's a lot. Yeah. But, and then this is kind of also, I've been being a broken record since we've started podcasting together like 5 years ago. But I've been saying this the whole time, and finally it's cited in an actual professional presentation. So I'd like to, point that out. But they said that residential rents averaged about $1,800 in March, and the household in Colorado Springs would need to earn almost $78,000 to comfortably afford this rent. But only about 1/3 of renters actually meet that threshold. And that's kind of what I've been saying for years, in that, you want to find a product that the majority of the population can actually comfortably afford. So, that's why I always say, like, try to set try to find a property or, a unit or whatever that is going to rent below what the average is, because then you're going to be able to attract the most amount of people that can actually reasonably afford your property. And I think they're just basically saying, yes, that's a systemic issue for the whole city. And then interestingly, they do have a couple of home ownership pieces on here too. They said that 1/3 of homeowners are also cost burdened by housing expenses, and they don't meet the $150,000 annual income needed to afford an average valued house of $457,000 in Colorado Springs, which, as we just talked about, the median value home actually is higher than that as of November. So I just thought that was kind of interesting by a pretty significant amount, over 30,000 difference between the two price points referenced. And then it says in the 2023 median household income was $87,470 in Colorado Springs, which is below the statewide median of $92,000. But El Paso County's median income was $102,800.
Yeah, that's a couple things. I agree. It's it's interesting to talk about the low income people coming out of homelessness, military, seniors. They can't find housing, right? Mm-hmm. And you're right. You drive downtown, like those Class A apartments. None of those are built to serve those demographics, right? The low income, the homelessness, getting out of homelessness. They don't go rent Class A properties. I mean, there's a huge mismatch there on that.
I mean, yeah, the rents that are being requested from those things are just astronomical.
So here, I think for anyone out there that has any interest in invest in Colorado Springs, great data, right? This thing is fresh off the presses, and it's really great data. This one stuck out to me. Like, if I could look at one metric, it'd always be like, what's supply and what's demand? And I think demand is harder to get an accurate number on, right? Where supply, it's much easier because they have to go file permits with the county, go see what it is here. And so on slide 13 here, I found it interesting to kind of show what they think they need about 8,500 units a year for healthy permit range. And they had that for a couple years in 21 and 22, and this is combined single and multifamily permits. But now in 2024, in 2020 we were at 9,000 combined, and now in 2024, we're about half that, around just under 4,000, with like 3,000 being single and less than 1,000 being multifamily permits. So I'm very curious the next couple of years play out. Like, hey, we have a lot of affordability issues right now. rents have, grown a lot. They're shrinking or flattening now. But long term, supply's not there. So, like, what's that mean for a couple of years? Do you have a comment, Troy, or we're just moving?
No, I was thinking about when Jenny was talking earlier. It's like, when have ever those different demographics been fully served, right? Has there ever been a utopic time where, the people coming out of homelessness and, affordability seems to like always be a constant issue.
Oh, yeah.
And it's getting worse. I don't disagree with that, but it's always been an issue.
Yeah.
And I think it just boils down to what Jenny was kind of touching on too, is that, the numbers have to work, right? And like the permits, looking at that chart you're looking at right now, Chris, is like, where are the investors going to be to make the numbers crunch?
Yeah, and that's a big part of the hang up, right? You can't, in Colorado, it's incredibly hard to go out there and build not just affordable housing, but like first-time home building or, first-time home buying type projects between fees and water taps and everything.
Yeah. And just building codes, right?
Yeah.
Like a lot of it is like there's so many standards of what makes a house has to have, like outlets every 8 feet and stuff. That's just expensive to do that.
Precisely.
And so I think there is this bigger question of like, should some of that go away in an effort to actually make it affordable to build something that serves the real population that we have? Yeah, that's a tough one.
I mean, when I was just kind of thinking about this, it's like, again, I'm no expert. This is just, person on the street thinking about like what you could do. But the only way I could think to bridge the gap would be to either somehow subsidize the building costs, because the costs are what they are. I mean, not everyone can like locally source their timber or, like you can't, they are what they are to an extent. And then on the other side of things, subsidize rents. If there are, a bunch of those Class A apartments like you're talking about, maybe the city needs to step in and help people subsidize rents if they make below a certain threshold to fill them. I don't know.
Yeah, I mean, well, that's where the Section 8 program comes into play. But I agree. I mean, that's the thing. It's just it's too expensive bill. I mean, Denver, I think 2 or 3 years ago now, maybe in 2020, they passed that new rule where, hey, either whether you're a single family home or a big multifamily project, you had affordability components. And you either have to pay a tax if it's single family, if it's multifamily, you have to keep some units. I think like 5 to 10% of the units kind of in that, somewhere in the affordable AMI range for the area median income, or pay like a one-time fee. And so they were subsidized from that standpoint, but at also at the same time, like it slowed down a lot of development appetite. Yeah. So I have no idea either. It's easy to point out the problem.
We saw it with the whole parking thing, right, on the multifamily in Denver, where they passed this ordinance because they were sick of people building stuff without adequate parking, and that's a mess, right? It just causes congestion and spill over into the neighborhoods around, and people don't like that. But then all of a sudden it's like, well, now you've just increased the cost to build these multifamily projects, so we're not solving our housing shortage with that, so they backed off of that. And I think there's always this hope in an urban area you can get, less than 1 car per person, or, but that's hard. And there's consequences on both ends.
Cover this subject, right?
I was gonna say, before we move on here, I know we got like 2 minutes left. Jenny, Brandon, Troy, when do you guys want to run for state legislator to go in there and solve the problem? You got Absolutely me and the podcast behind you for full endorsement. Okay. I will be your cheerleader.
I think I'm going to say no, Chris. Sorry.
It's a no for now, Troy.
Okay.
What those representatives tell us at the event that I think they make like $26,000 or something like that for the session, and it's like brutal schedule for 5 months out of the year or something. Like, no thanks.
No, again, there's no. I think we all wish we had a magic wand, right? Yeah. All right, I know we got a couple minutes left here, and then we gotta hop off. But I want to quickly talk about interest rates, and then kind of just end on a positive note for where the opportunities are. So Troy, we got 2 minutes left. Yesterday, the Fed had their December meeting. They cut things a quarter point, so a third quarter point cut for the year. What the heck does that mean for mortgage rates, which are not directly correlated to what the Fed and Powell does?
Thank you for prefacing that, Chris. I appreciate that.
Not my first rodeo.
Yes, for sure. It's a step in the right direction, so we're hopeful. I mean, that I didn't look at the 10-year this morning to see where it was kind of sitting at. Last time when I looked at it earlier this week, it was at 4.2.
Yeah.
And we were tickling on 4% with the 10-year. But the 30-year fixed, which is usually where everybody gravitates towards, we're still kind of that average of 6.2. So it's, I mean, it's better than what it was earlier this year. Whether we'll see some great rates this coming year remains to be seen. We've talked about that for years and being hopeful, but wishing in one hand and
it's hard when we've been wishing for 3 years and haven't gotten our wish.
Wishing's not going to get us there, so we've got to just play the hand we're dealt.
Yeah.
6.25 is kind of the average going 30-year fixed. I've seen some better, some higher, depending upon the situation, circumstance, and the loan type, right? So there's a lot of variability to that, but still not bad. Still, traditionally and historically, that's not a horrible rate by any means. So.
Cool. Well, as we wrap up here, I know we're talking a lot of news and headlines, and most of it's not like up and to the right and positive news. But again, going back to what we care for investors, like that's also where we create opportunities, right? When it's that old saying, be greedy when others are fearful, and fearful when others are greedy. Everyone's fearful right now, not more about being greedy. Yeah, exactly. Like there are, even though sentiment is down and pessimism is up, like there are some great deals, and it might be too late, but now we're recording this December 10th or 11th, right? Man, Thanksgiving and New Year's, best time to go out there and buy a rental property right now, right? That's what the deals are. And even going to next year, like there's going to be a lot of amazing deals out there. Now,
I think January, February, for sure.
Yeah, I think there's going to be choppy waters regardless, but like, I mean, if you're, looking for properties, go out there and hunt. Because if you go out there, look at 1 or 2 properties, not going to do it. If you go out there, look at 20 or 30 properties, do a couple like low-ball-ish type offers, you'll go out there and make a pretty good deal happen in this market. And especially as you look in some neighborhoods, hey, some neighborhoods in spring, some neighborhoods in Denver are doing amazing. Some aren't, right? Hey, take out that scalpel, find the neighborhoods that, from the micro standpoint make sense. You can go out there and buy some really good value out there right now. Especially in some new builds, especially I think in the 2 to 4 unit range too. Like those properties just aren't trading. So on a positive note, there is opportunity out there if you're going into acquisition mode. We have to go out there and hunt for it and roll up your sleeves for operations.
We just a little positive note. We signed up a fourplex, kind of the East Colfax area. And
yes,
the guy had some furniture in one of the units, and he was like, "Yeah, can you just help me get rid of it?" And we were like, "Well, why don't we look at doing a midterm on one of these?" And so these are all 2-bed, 1-bath. It's like a fourplex, long-term rents in maybe the 13 to 1400 range.
How close to Colfax is it?
I don't recall. I don't think it's like.
It's not like in that 2-block buffer, or is it really close?
I don't remember.
Okay.
Yeah, sorry. But we got our first midterm lease on it, just a month long, but at like $22.70.
Nice.
So we'll see. I mean, there's going to be a little more vacancy potentially, and you have some costs because you're paying utilities and internet and that kind of thing. But still, a pretty nice premium. So yeah, there's still some ways to on certain deals to squeeze some more money out of it and get some wins.
Cool. Awesome. Well, another great month. Last one recording for 2025. Big thank you to Jenny, Brandon, Troy, and the Jeff who's not here for participating in these. And a big thank you to Jules behind the scenes for getting things done. It's been another great year in terms of talking about things. Looking forward to 2026. If you guys are interested in Springs, talk to Jenny. If you need help with property management or medium-term rentals, talk to Brandon and his Key Renter team. If you need help with a refi, because people are doing those sometimes now, or buying a property, come talk to Mr. Troy Howell at Nova Home Loans. But a big thank you to everyone, and hope everyone has great Christmas, Happy New Year, all that wonderful stuff. So thanks, everyone.
Yeah, thank you.
Bye, everyone.
Bye.